Hello, everybody. Thank you for your patience. Welcome, and thank you for waiting. And welcome, very special welcome to Richard Donnell, who is the Director of Research at Zoopla, who's kindly agreed to join me today on the Moving Home with Charlie channel to talk about Zoopla's House Price Index published for December. Now, I've had some fantastic questions from everybody on X. Now, what I'd like to just remind everyone is that Richard is not responsible for everything that happens at Zoopla about how the website works and that kind of stuff. Richard, not Rupert. Richard, you are very much on the data and analysis side. Is that right?
Yep.
Yeah. We do have some questions about, and I know you get these all the time, about the automatic valuation algorithm.
Yeah.
And how it works. A few questions on that. But what I wanted to start with is I would like to bring up your report on the screen, and I'm going to start from the bottom because I think you put the most important part at the bottom.
I always do that. You've got to read the whole thing.
You've got to read the whole thing, everyone. You've got to read the whole thing. So I have linked to this in the description below if anyone would like to read the full thing himself, but you really must read the whole thing. And it's interesting. I've got a couple of headlines, like two very extremely different headline takes on the same report, which is worth pointing out to everyone what that happens. But let's just start with what you said here. I think it's very important, probably the most important thing of everything you said. Let's not get carried away. We are still in a buyer's market. In fact, I think you said we're locked in a buyer's market recently. It's good to see renewed activity. I'm completely with you there. Any uptick in activity and transactions is welcome for everybody, because without that liquidity, it just makes moving so hard and really gets in the way of people moving on with their lives. Sorry, I need to put that back on to just do it this up. Last year, mortgage rates fell in the first 3 months of the year, which supported sales volumes and led to only modest price falls. To be discussed. We expect current mortgage rates to have same effect this year, supporting sales volumes rather than impacting house prices. Yep, I don't disagree with that. House prices will be kept in check by several factors. Now, what you mean by that is that they're not going to be allowed to rise because of these factors. A greater supply of homes for sale, giving buyers more choice, especially for larger family homes. Am I right, Richard, that the increase in supply is larger than the increase in demand at the moment?
It is at a percentage level. I mean, we've got, I don't know the exact number actually, but we've got 22% more homes for sale now than we had a year ago. I think there'll be way more people looking to buy property than there are homes. Well, I need to check these numbers. I need to check this actually, Charlie. But
okay,
you can't really compare. Demand might be up 12% and supply is up 22%. On the headline level, supply is rising more than demand, but actually, in aggregate terms, there's probably more than 300,000-400,000 people potentially looking to buy a property. So it's all about at a local level, what's for sale or what's not for sale. Hence the point I'm making there about we can see there's quite a lot of 4-bed family houses that have probably been on the market, were on the market last year, back on the market now. And the question is, how many of these buyers in the market today actually want to buy a 4+ bed house with higher running costs, bigger mortgage? And so, but I think just, what really drove the big price rises over the pandemic was incredible scarcity of homes for sale. And we're now back to normal levels. So buyers have got more choice and they know there's more room to negotiate, basically.
Well, it was a combination of the scarcity of homes for sale and the easy access to very cheap borrowing.
Yeah,
which of course was behind it. I think I'm very glad that you've also made this point and reminded this point. Half of those with a mortgage are yet to refinance onto a higher mortgage rate, keeping people price sensitive and focused on value. Yep, that's so important not to lose that. A small but not insignificant number of sellers cutting their asking prices to attract interest, continuing the 23 trend. And I thought this was great, not great, but like a fascinating fact. Close to 1 in 4 sellers in London is accepting more than 10% off the asking price in London and the Southeast. So that's what you've. I mean, I just wish some of the papers would lead with this sort of stuff. We had. Let's just show what we've got. The headlines. I just want to share this tab. So London leads rebound in home buyer demand as 2024 gets underway. And I've already had so many people messaging me today and saying, oh, everything's back. The housing market's back. Everything's back. And, and of course, it's headlines like that, which you didn't write. which are misleading, I think. And then, but also equally the other way, the Telegraph comes out from the same data, sellers forced to slash asking prices as housing market stagnates. I mean, two completely different headlines gleaned from exactly the same report that you published, right?
I think, but this is what tends to happen. I think it's sort of because I've written a few articles in the first part of this year, because I do think there's a bit of over exuberance appearing in the way we talk about the housing market, and it's, for me it doesn't take, to adjust from super cheap money to 4 to 5% mortgage rates is not, it's not a short adjustment period. And I'm sure we'll debate the house prices thing, but on our index, most indices, and again there's a whole separate webinar to be done around indices, but we just, prices didn't fall, and prices could have fallen more last year. There's room for prices to fall, but the market didn't fall maybe as much as we all thought. And so for me, that just means that prices take longer to adjust until prices and earnings get back aligned. But look, you're absolutely right. I mean, if you read the full report, there's a whole load of different angles in there. I think the other thing I'd say about London is the most sensitive to higher mortgage rates. It's the most expensive market. So higher mortgage rates have a much bigger impact on demand than, say, if you're buying up in Warrington or Bolton or somewhere. So I do think people have read the headlines. They've seen that mortgage rates have fallen back down to, say, 4.5%. So I do think that's probably brought some people into the market. But people coming into the market is one thing. The most important number that we track is really just how many deals are being agreed, how many buyers and sellers are agreeing deals. And as you say, on average, the discount to the asking price is 5% on our numbers. It's flattening out at that level. But ultimately, even if 1 in 4 people are having to take more than 10% off the asking price, it's probably just the asking price was unrealistic to start with, frankly. And so they've just had to accept the right price. And so again, there's this whole piece, which I think, look, other portals, agents, we're all out there saying to sellers, don't get carried away. There's more chance of your home selling this year, but you've still got to be realistic on price because buyers want to do deals, basically.
I'm not sure the sellers are getting that memo, though, are they?
Well, they never, but they never, they never do. But I mean, it's who wants to? There's always that hope value, isn't there? Basically, of you're selling your home, what you want to buy next.
Yeah.
And so for every 5 or 10 grand you don't get for your home, you might have to put that on your mortgage. And at 4.5% mortgage rates, it's slightly less expensive than 5.5. But it's just the housing market tends to adjust slowly, and volumes tend to take the hit more than prices in the absence of a big economic recession and rising unemployment.
I agree with you. It's slow, and I think it's really important to remind everyone that the housing market does react slowly, and even more slowly given the fixes, the greater number of fixes we have in this market than we did 15 years ago. And I accept your point that you actually, certainly Zoopla has been the most firm in saying be realistic on asking prices, and we saw in Rightmove's most recent prices that the asking prices are trending down. They ticked up a bit in January over December, but it was a big sharp drop in December. So asking prices are trending down, which is a good thing for transactions when you've got but this is probably the most important question I'd like to put to you, because as you will know, the practice of, let's call it, extreme overvaluing by some agents to corner market share, which you all know happens. No one even denies that it happens. I've even had agents admitting that it happens. Coupled with the way, I mean, I looked at all the different headlines from your that came out on the back of your report today, and the Telegraph was the only, actually, Mark Schaffman at Estate Agent Today also was pretty balanced about it. But the Telegraph was the only one that saw the negative side. But all of the other papers were like, yes, it's bouncing back. Everything's good. It's going to be great. There's optimism. And so, because of the hope value, I think that's a very good way of putting it. And because when a seller goes out and picks 3 agents, and all 3 agents go, yeah, and put a number on it that they all know is over optimistic. And when you look collectively at the whole media messaging on the housing market, it's intentionally or not, It's always leans towards more positive. Now, this is, as you know, if you follow any of my stuff, you'll know how passionate I am about this. My worry about this is that the risk of negative equity at certain times in the market cycle is higher than at other times. And nobody, when they set out to buy, no one that ends up in negative equity expected that they were going to. And they thought that they were paying a fair price and it was safe to do so. And what it comes down to is actually it's the point that we didn't agree on in our last video, and you joined me, was which you haven't touched on in your report, because it's obviously not part of what Zoopla does, is to make economic forecasts about the economy. But given the increasingly gloomy outlook for jobs and the almost daily announcement of job cuts, and John Lewis saying 11,000 job cuts, and this morning Bloomberg doing the article about big falls in December vacancies and that kind of stuff. Does that not factor into your view of where the housing market? Because as far as I'm concerned, we've seen the first weakening of the market. Let's not debate exactly how far it has or hasn't gone yet. But I see 2024 in terms of prices, whatever does or doesn't happen with transactions, is going to get worse. And my worry is the number of first-time buyers who are still going to overstretch themselves and find themselves in trouble. So I want more transactions, as you do and everyone else does, but I do worry that there's not enough caution being urged.
I think it's look, I don't, I'm not moving the forecast that we made of our index falling by another 2% this year. But actually, I think, as we talked about last time, I think house prices are just going to go sideways for quite a while. And because we need to repair affordability, basically. And my hypothesis has always been that it's about very, very low house price growth and some nominal price falls, but real price falls that then slowly sort of price people back into the market. I think the challenge of the housing market over the last decade is it's just being driven by more and more by people with money. We haven't been lending to marginal buyers like we used to lend to. So I've just written an article on first-time buyers and some of these government proposals, and I think I'm right in saying that in 2007, 6% of mortgages in the whole year were over 95 LTV. Last year, it was 0.25. So, we're just not, lenders just haven't been that interested or incentivized to do high LTV lending, because of much tougher capital controls introduced after the global financial crisis. And also all this mortgage affordability stress testing that we talked about before. So it's incredibly hard to take on a lot of leverage in this market, given these rules. Now, you can make it work in the north of England, Scotland more easily, but it's nigh on impossible to get really high LTV finance to make it work for a normal first-time buyer in London South East. So the trouble is, in the housing market of the last decade, more buyers have just put down more equity, even first-time buyers. And so you get to a position, our estimates are that 9 in 10 homeowners have got an LTV of less than 75. So there's a lot of equity there to absorb any price falls, which, for your argument, prices could fall more. In fact, we were at the more optimistic end for last year, and I was surprised that prices didn't, we said -2, actual -2 on our index, or -1 on our index, when we said prices would fall about to 5%. So I think, but you're absolutely right. If the economy weakens and employment increases, that's bad news for the housing market. It weakens demand. But equally, I think the big difference as well to previous cycles is banks pursue forbearance. Repossessing someone is a sign of sort of failure now by banks. So banks will go to much longer lengths to make things work for the customer. And again, if the customers have a higher credit quality and put down a lot more equity, it's much easier to work with someone who might be in some difficulties but have got a sort of an 80% or 70% loan to value mortgage than someone on a 99 going to 102% mortgage whose prospects don't look so good. So I think, but the housing market's purely an extension of the economy. So, but I think we're just going to see very low to no house price growth for quite a while, which could mean real price falls. But again, I don't see, unless there was a huge sort of economic catastrophe, which no one is currently forecasting, that would lead to bigger falls. Apart from you, probably.
No one is forecasting that. There are plenty of forecasting pretty bad one. But I agree that amongst the economists, Not many of them see something bad, but there are plenty of commentators who do see pretty bleak. I mean,
But the
I'm
fact
seeing.
is, I just think the main thing is, just to reiterate, is we just, over the last 10 years, banks have not crept credit. They haven't sort of chased riskier lending as a way to get growth, because the mortgage regulations introduced in 2015 have disincentivized that and made it much harder. So when the Bank of England introduced these rules, because it was really worried we'd have a house price boom and bust fueled by super cheap money. And of course, people were borrowing at 1 or 2% mortgage rates, but everyone had to prove to their bank they could afford 6 or 7 in the first place. And now anyone buying today has got to prove to their bank they could afford 8 or 9%, even though they're paying 4.5%. So it's not a savior for everything. But it, again, a few years ago, I did a presentation, worked out if we didn't have those mortgage regulations, house prices in London would have been 30% higher. That was about 3 years ago. And absolutely, house prices would have been probably seeing double-digit price falls. But I think, again, it's a sort of tick of the box of the Bank of England, who've sort of potentially smoothed out the cycle and made it less boom and bust. But that's not to say that, we're probably, I think, we're not going to see a lot of house price growth either, basically.
Well, I'm somewhat heartened by what you point out about that there are far fewer very high loan to value mortgages being given than there were in the last cycle. That genuinely is good news, and does mean there'll be fewer people who get affected by it. I know that we've discussed this before. Each different index has its own method of calculating its average price. It's this one number that you come up with. And I know someone asked the question, I'm going to put it to you now. I might get their wording wrong, but I have on this channel done a very crude explanation to show that you can have house prices falling when the average transaction value rises. And that we do have evidence in the Bank of England that transaction volumes at lower values are significantly lower. Therefore, the average transaction value could be moving up. Now, it's not a raw average. I realize that. It's quite a complex calculation. But, you talk to people who are trying to sell their houses out there, and there are very few going, oh, yeah, I only had to lose 1 or 2%.
I think it's, I've built a house price index, and having sort of overseen and worked with colleagues to build a house price index, it's tough, because effectively there's 20 million privately owned homes out there. 1 million of them transact a year, and you're trying to sort of infer from the 1 million, the value of the 20 million. And as we know, there's massive differences across the country in how markets work. And I'm sure you've covered it. Different indices. And then we've got mortgage only indices. We've got indices with cash.
Yeah.
So I think these UK averages are fine for macroeconomists to get a general sense of our prices rising in double digits, 1% or -1 or 2. But what people really care about is what's actually the value of my home. And I think, coming back to your point about, do agents overvalue or whatever, I think the question I don't think any consumer dare ask when they get an agent round, because it's almost like the agent comes around, they do the pitch, they talk through all the comps, and then the sort of elephant in the room moment is, so what's it worth then? And then the agent is going to give an asking price. They're going to give a view of based on what they think's in the market, and then a reduction, as in a potential reduction to the asking price, to a degree sell price. And I think every consumer, every serious seller should ask the agent, if I wanted to guarantee a sale, 90% sure that this is going to get an offer and go unsold subject to contract within 90 days, what's the price I should put it on at? And I think that number is a number that most homeowners don't want to hear an answer to, basically, and I don't think people ask the question because, and obviously the barriers to entry to listing your home are really low. And so, but if you're really serious about moving, you have to set your asking price, and you've got to have an honest conversation with your estate agents. And I'm not sure how many consumers really have that honest conversation, basically. And it's whether they hope they might get X because they've seen a house at Y down the road and it unlocks that move. And so I think just, that's what I always say, if you're serious about moving, you've got to speak to an agent and ask them, what's the price to really get the sale away in X days or weeks.
Yeah. I agree with that. I've always said that, when you ask an estate agent, how much is my home worth? whatever their answer is, it's a guess, because until they get competing funded buyers, you won't know what the market is going to pay for your home. And that's the question everyone should ask their agent is, what will you do that other agents don't that will get me competing buyers for my home?
Yeah.
Then we'll find out what it's worth. But of course, especially uninitiated first-time sellers, that often they don't know what to ask, which is one of the reasons I'm doing this. I had a question about. Are you happy to take a question about the Zoopla valuation, my home valuation? Because someone put a question in here. Let me just let me find it. Sorry. I can't find it now. Basically, he said he's got 2 properties and he's had them in Zoopla and been tracking the value for quite a long time. And in the last year, one of them's gone up about 30% and one of them's gone down about 30%. And he privately sent me through the actual screenshots from his My Zoopla thing, which I can't share because it's got the exact address in there. So I double checked that this was actually genuine, and he has given me the exact Zoopla screenshots of it. And he says I'm feeling a bit. And what his worry was that the agents are adjusting what they're recommending because of the Zoopla valuation. And he said, but if one is up and one is down, is it because they know what's happened specific to my property, or what might cause that to happen?
Look, it'd be good to see the real examples. We want to send them through. I think, look, an AVM, a valuation model is no different to a surveyor. It takes the subject property, and look, for not every single property, we have full attribute coverage, basically. So you take a property, we know what property type it is, we need to get the attributes. If we don't get the attributes, that has an impact on the ability to value, but that's reflected in the confidence levels. So again, it's really important when you look at your Zoopla valuations or the price estimates we produce, it will say whether it's high confidence, medium, or low confidence.
That's one of them. I haven't put the address in there, so that's one of them.
High confidence.
That says high confidence.
Hopefully that's a good one.
That's a high one. And that one has, that one's the one that's gone up. And the other one also says high confidence.
Okay. Well, it all depends on.
It's much less. And the other one is it says 3.
Okay. You'd need to, if you send me those through, I can have a look at them. But I think the way the AVM works is it says, look, here's the property. These are the attributes we know about it. This is the comparable evidence for that property. And if there's enough comparable evidence and the property is homogeneous enough, then it will deliver a valuation, but also say whether it's high, medium, or low. What can happen around the edges. I mean, I'm just purely speculating here, but where we don't have the attributes, maybe some shared ownership data's come through at a lower sale price. But again, I'd happily have a look at that. I think we're updating 30 million valuations every month, basically. So there's always going to be sort of outliers. But I think. And we haven't published it yet, but we've just done a big analysis of how those 30 million valuations have changed over the last year. And so plus or minus 30 sounds like a massive outlier. So it'd be good to sort of understand how those values have shifted. But, because the edge case is a plus or minus 5% basically last year, rather than plus or minus that much. But look, it's an estimate. And again, as we say, if you really want to know what your home is worth, speak to an agent.
This is the point, and this is I have a pathological aversion to all AVMs because I think that whilst they are effective lead generating tools, they're otherwise relatively unhelpful. I hear agents say all the time that a seller thinks their worth is X because Zoopla says so.
Well, I don't know. There might be something in that. I think there's AVMs are used by banks, but again, I think AVMs are used by banks with lots of rules around them. For example, say lenders might not use an AVM for a mortgage decision on a flat. So I think there's a lot around. Sorry, apologies, and these lights keep going up. There's so for example, on flats, things like leaseholds, there's all sorts of complications that an AVM might or might not be aware of, basically. But I mean, if you put an AVM on an absolutely super liquid vanilla 3-bed semi or detached in a very homogeneous market, it's going to be bang on every day of the week. As soon as you get into different edge cases, and again, again, it's ultimately, you can look at it. It's called an estimate, and look, you need to chat to an agent basically to get a sense of what the property is really worth. But I think, again, across the vast majority of properties, I think they're a pretty good initial indication for those people who just want to watch and keep an eye on the market, maybe watch other properties. It's kind of interesting. It gets people talking about property and valuation. But again, I think, but as you've said, even if you've got a super liquid property, it's probably going to be quite easy for agents to value it. But as soon as you start putting in a sort of 7-bed mill house in the middle of Wales, where nothing's sold, I mean, that then the uncertainty gets much wider, basically. So it's almost a continuation of the index debate about the data you're using and the information you know about the property, basically.
Did you see that? You may not have had a chance. I know you've had a busy day. I mean, and now you've been. You've been on Sky News today, haven't you? Were you on Sky News earlier?
Yeah.
So it's nice that you come to the serious places now.
Okay. Save the best till last.
There was an article about the Welsh housing market. Is there a lender called Principal who published Welsh house prices are well down, I think 6% down, and in Merthyr Tydfil they're down 20% during the calendar year of 2023. And it reminded me about the point, because the Zoopla index is the UK, right? Is that including Scotland and Northern Ireland?
Yeah, no. The Zoopla house price index is what's called a repeat sales index. So we take pairs of sales, we take mortgage valuations, we take sold subject to contract. But no, we go all the way down to local authority level and lower, basically.
But you include Scotland and Northern Ireland, yes?
We do Scotland, Northern Ireland, yeah, and we've got cash in there as well as mortgage value.
Yeah, no, because the important thing is, of course, is that both Scotland and Northern Ireland, according to the Land Registry's most recent figures, saw year-on-year rises, while both England and Wales saw year-on-year falls. And so because those all cancel each other out a bit. Nowhere amongst the four countries is it actually sort of the average of all four of them. It's either above it or below it. And so this one number fits all narrative that comes out in the headlines is, I think, so unhelpful, because it's really important that London Land Registry figures was down 6% year on year.
No, I think, our index has shown the same. I think we've got Scotland, Northern Ireland, all the northern regions of England are all slightly positive.
Yeah.
And then everywhere south of there is prices are falling year on year. And then you can go more granular into that. I think, look, it's, again, what you're really relying on here when you're building indices and going granular is what's selling representative of everything else. And I think it is a frustration. I see it on the tweets I do. I think consumers, homeowners get really frustrated with house price indices because they're not quite sure what are they showing, and they're really for macroeconomists. And even the people that built, the two academics that built the mortgage lender indices, said you shouldn't really look at month-on-month changes. It's the 3-month sort of rolling change that really matters. So again, I think if you really want to understand the value of your home, you would have to really track all the data that's out there about what's selling. I'm sure a lot of consumers have got a good idea of what their home is really worth. You can track your home on Zoopla, or you can get an estate agent around to give you a view.
You will also have an idea about how much stuff is just sticking there, not dropping its price and not selling. I mean, there's a lot of that out there at the moment as well, isn't there?
Well, I think there's, look, all the measures of the housing market, they're all based on activity where deals are being, house price indices are only as good as what's actually being agreed in the market, basically. And so I think the proportion of homes that aren't selling, and we do track this, the proportion of homes that are for sale that are having their asking price cut is a good indication of effectively where sellers are out of kilter to where buyers are. I mean, over the whole of last year, that number was quite a lot above average, and then it got worse towards the second half of the year. It's jumped again, but it's not as high as it was this time last year. So again, there's all these triangulation points of all the data we have where we can see, we get a sense of our buyers and sellers within touching distance of each other. Because again, we would have been far more, we would have been far more negative if we saw a massive gap between buyers and sellers, basically. But you're right, there are things that aren't selling. And again, anecdotally, I have friends and colleagues who sort of live in the greater southeast area, and they make observations that 4-bed houses that were sort of red hot and on fire over the pandemic are having their asking prices cut and cut and cut. But then that's in one part of the market, basically. And so I think it's this. But at the end of the day, there's no point in having a UK house price index because it is just going to average everything out, basically. And but if you live in a 2-bed flat in Manchester versus a X bed house in wherever. I mean, this is why granularity of data and more localized info is what consumers need.
Well, this is what they need, is what they want desperately. I mean, people need to be able to. I don't think anyone should be able to answer any question on house prices unless you say, is it a house or a flat? Is it freehold or leasehold? And what area, what part of what city are you in? Because every market will be different. If you're in a town now which has a large employer, one of your large employers is John Lewis, and they're going to be closing the place down, well, that market's going to get affected adversely. And so it is hard. But I don't know if you picked up, but I'm working on releasing an exchange price index where we're going to be inviting movers, buyers and sellers, as well as agents and conveyancers, to contribute exchange prices as they happen. So we're going to have hopefully within, so in 1 month, we'll be able to report on the previous month's exchange prices. The benchmark I'm setting as an acceptable sample size will be to match whatever the land registry's most recent sample size was. And if I can get that many exchanges reported, then we've got something that, subject to errors, will be as accurate as the land registry, but hopefully at least 3 months more timely, and therefore be helpful to everyone that's trying to figure it out.
So the main message here is, don't get too transfixed on what house price indices are saying. Just look at the broad trend and direction of travel. But I guess only by putting your house on the market or chatting to an agent and asking that all-important question of what would you put this house on the market for if you really had to sell it? If your fee was based on agreeing a sole subject contract, what would you put it on at? You might not like the answer, but that's the question everyone should ask, but no one does.
Yeah, absolutely. Well, Richard, thank you very much. I'm very grateful to you for your time. Have you got anything you'd like to add for everyone that's watching, or any questions for me?
No, it's sort of obviously we had a good sort of exchange about over a year ago with the Stig as well. I mean, I think have you moderated your views? Are you still do you think we're sort of well overvalued and still set for double-digit recorrection over a period of time? I
think that for reasons I cannot prove, actual house price falls for people rather than macro figures the falls are quite a lot larger than are being reported already. Number one. I mean, I've had agents, multiple agents, say to me privately, I don't know where these prices are coming from. The market is off so much more than that. So that's agents saying that to me. I think the economy in 2024 is going to be so much worse than most people expect. I'm hearing headlines and also anecdotally, locally. This guy on TikTok, a plasterer, he said, I've been a plasterer for 12 years. First time in my whole career, I've got no work. I've got no phone calls coming in. Got no work. I've got nothing. So I don't know what I'm going to do. And he said, all of my friends who are plasterers as well find the same thing. So all these anecdotal, and I had London Cabbie this morning commenting on YouTube saying, my December was 30% down on income from the previous December. January is dead. It's so at the front line. I don't know, Richard, you're much younger than me probably. I clearly remember the early 90s and how bleak it was, and it feels a bit like that. But Stig, who I spoke to this morning, said he's worried we're actually going to look more like the unemployment rise in 1983, which was much, much worse. So again, he's totally impartial about this. He'll often beat me over the head and say I'm being wrong and I'm being a dramatic whatever. But he's really fearing that the economy, the jobs economy especially, is far worse than anyone was expecting or predicting, and that is the basis of my opinion on where house prices are falling. And I think they're going to, we won't see it reported for a long time late, but I think they're going to be really sharp falls in 2024. I've already had agents talking to me saying, some agents going, no, we're busy, we've got some stock is priced well, we've got viewings and there's stuff happening, more challenging than usual, but there's some other agents just going, lettings is really busy, sales is not. We've got a real problem.
No, I agree. I think it's look, I mean, there's you can see it. There's sort of different sectors are sort of going through the reductions in staff and changes, and again, all that adds up. And I think unemployment's definitely ticked up. So we'll have to wait and see how it plays out. But no, very good, Charlie. Thank you for getting me on. Let's keep in touch.
I'm very grateful to you for coming. Thanks very much, and I hope you'll come back again soon. In the meantime, Thanks, guys. And thank you, everyone, for watching. Thank you. I'm sorry we didn't get more questions. There are lots more questions here. We could hear for hours all your questions. But thanks for watching, guys. And we'll see you on the next one. Bye-bye.